Good afternoon. For those of you who don't know me, my name is Streitberg and I am the Senior Client Manager at Ease Business Services. I can honestly say that with over 25 years of experience in SME and taxation, I've never seen a time where there is more complexity in our current environment than ever before. As we approach the end of the 2023 financial year, I want to highlight to you the importance of trustee minutes, specifically in regards to the distribution of profit. Historically, the ATO allowed trusts to effectively table these a few months after the year's end, which allowed for greater accuracy with regards to tax planning. Now, the reasoning for this was actually quite simple. It was to enable a trustee time to document their minutes from meetings that were held on or before 30 June, because once upon a time, everything was done via paper, and we had to take time to write up these documents and put them in folders. However, with technologies progressing, the ATO disallowed this practice some years ago, and as such, all minutes have to be prepared and signed prior to 30 June, especially those where we digitally sign them. The digital signature just stamps the date that someone e-signs. So the failure to have a valid minute upon request by the ATO effectively leads to the trustee of the trust being assessed on the income on behalf of the trust at the highest marginal tax rate, which is 45% plus the Medicare levy. So you can understand the importance of determining the trust income by reference to the trust deed itself and distributing this in the most tax-effective manner as possible prior to 30 June. Because of this, tax planning and the preparation of trust minutes are significantly important to our clients. This year, however, additional changes to the process are now required. As part of the process in preparing the trust minutes for our clients who choose this service, there will be a secondary step for FY 2023. Once the amounts and the beneficiaries have been determined, the beneficiaries will be notified of the distributions by ourselves on behalf of the trustees, and the beneficiaries will be requested to respond and inform the trustee what they wish the trustee to do with their entitlement. This has come about due to the recent reviews of Section 100A, which we have discussed in the past and made mention to via social media and emails. With this process in mind, we will document each beneficiary's request and notify the trustee to action it as appropriate. So for instance, if someone is distributed $20,000 of taxable income and that individual responds and says, I want to park that $20,000 within the trust for the trust to use in its business for the next 2 years, then that's what we'll do, or that's what we'll instruct the trustee to do, and that will be documented. As you can appreciate, this additional set of procedures takes time, and the price of this service reflects this now. It is important that such actions be documented, so to ensure compliance with the recent interpretive decisions in relation to Section 100A, and to prevent a trust being assessed upon undistributed income by way of either an invalid minute and or the ATO's review in relation to the distributions. What that generally means on that latter part is that if the ATO were to review that and would sit there and say, well, there's been no true determination of the income with regards to the individual hasn't said what to do with this income, and we believe this income is simply a scheme to avoid taxation, the ATO would then invalidate the distribution and assess the trustee at the highest marginal tax rate. So that's what this is designed to prevent from happening. So as always, we're here to keep you informed and help you with these procedures. Of course, you're always free to do these yourself, but I would caution that it is becoming increasingly complex year in, year out. Distributions have to be made with valid minutes. Those minutes have to be specific to the clauses within the trust deed that discusses the determination of income, because an invalid reference to a clause can actually invalidate a trustee, which will again lead to the trustee being assessed on behalf of the trust at the highest marginal tax rate. If you do have any other questions, please feel free to reach out and speak with us. This secondary step will be incorporated as part of the 2023 minutes process. Look forward to hearing from you. Thank you.